Welcome, ladies and gentlemen, to this webinar on encouraging effective and inclusive savings. People are just filling up now, so we'll wait one more minute. Wow. Okay, we'll get started because we have a lot we want to cover today. Welcome to this session. My name is Sam Mendelsohn. I'm Financial Inclusion Specialist at the European Microfinance Platform and a board director of the Financial Inclusion Forum UK. At e-MFP, I'm part of the core team that runs the European Microfinance Award, and I'm the lead author of the award publication each year and the Compass series of the survey on financial inclusion trends. A little bit about e-MFP and FIF UK just to start, and as people are joining. For those of you who don't know, e-MFP is the leading network of organizations and individuals active in financial inclusion in developing countries. It has over 130 members from all parts of the world and covering support providers, researchers, consultants, raters, FSPs, and NGOs. FIF UK started in 2005 as the Microfinance Club of the UK, and it's a UK-based financial inclusion network raising awareness of financial inclusion and sharing best practice. FIF runs several different events a year, various evening events on all aspects of financial inclusion, and also a quarterly breakfast news event called the Financial Inclusion News Review. FIF is run by an all-volunteer and very active board, many of whom I can see on the attendee list here as well. Delighted to welcome everyone, and so many of you, over 230 registrations and rapidly approaching that of people who are already here. And from all regions as well, from Sub-Saharan Africa, we have people from LAC, from South Asia, from the East Asia Pacific. So thank you very much. Everyone is used to webinars by now, I'm sure. The way it will go is that all attendees' mics will remain muted, but there is a Q&A and a chat functionality, and there'll be plenty of time at the end for that. So please do add your questions. We'll be going through them. Can I have the next slide, please, Kemi? So a little bit of background to this event. For the past 5 years, there's been a joint FIF UK and e-MFP event on the topic of the previous year's Microfinance Award. So it's on education and housing and technology, climate change. Last year, we did one on the sector's response to COVID back in May. And obviously, in previous years, it's an in-person event. And while it would be very nice to be having wine and canapes at a fancy law firm in London, being online has a lot of advantages too. We can have a much broader audience than we would otherwise be able to have of people who can travel. And we can bring in speakers who wouldn't be able to make it either. And as an example, we have 2 practitioners today who are able to dial in and tell us about their experiences really in the field. I won't give lengthy introduction to the bios of my fellow panelists today. You've seen them in the invite, I'm sure, and they'll be able to introduce themselves a bit. So let's get right into it. There are going to be 5 parts to today's session. I'm going to speak for about 10 minutes at the start with introducing the topic, why savings matters to clients, why it matters now more than ever. A bit of background and takeaways from the European Microfinance Award on this topic that has ran over the last year, and introduce the new publication that was released a few weeks ago called Encouraging Effective and Inclusive Savings. And then when my colleagues and I were starting to think about how to put this webinar together on the back of a full year of focus on the subject, I thought it's a shame that all the people who are really into financial inclusion tend not to have a grounding in behavioral economics. And if you look for someone who can really get into the meat of behavioral insights, they are not going to be a financial inclusion expert. And somehow these 2 circles became a Venn diagram because we managed to find such a unicorn. And Laura will be speaking after me. She's going to give everyone a primer on what behavioral insights mean for understanding financial decision making, and especially how people save, why people save, what gets in the way of them saving. Then we've got Govinda, who is the chief of the micro and small banking unit at Muktinath Bikas Bank in Nepal. They are the winners of the Microfinance Award 2020. And he's going to talk about the adapted solidarity savings model for which they won. Janet Hayes heads up the Savings at the Frontier program that you'll hear much more about. And Abed Darko is CEO of DSS Platform, which is one of the partners of Savings at the Frontier, but also was a semi-finalist in the award this year. Then we're going to have a group discussion on some topics that should kick off discussion for an audience Q&A, and then we'll take questions from the audience and try to cover them as well. So next slide, please, Kemi. So why do savings matter to clients, and especially in times like now of economic shocks? There are benefits of savings well established for clients, for institutions, and for society as well. But we all understand why clients save, because we all do save, even if not for all the reasons that are on this list. You have consumption smoothing, which means managing the day-to-day household finances, protection from shocks. It's well established from diaries research that the poor have volatile incomes. They are more susceptible to shocks, particularly health shocks, and savings is a safety net against that. Long-term planning, that can be for weddings, funerals, tuition expenses. Gender empowerment, well established too, that giving women autonomy over their own finances, being able to save them, keep them for themselves, is critical in a lot of positive gender outcomes. Equity creation, productive investment are less common, but equally important ways. Formalization, the creation of a formal saving financial infrastructure in a country. And then safety and convenience, the ability to reduce risk of loss, of theft, of opportunity cost. These are all reasons that savings matter. Next slide, please, Kemi. So jumping back a minute, a little bit about the Microfinance Award for those of you who are less familiar. It's been running for about 15 years since it started. It's a €100,000 prize for the winner and 10,000 for the two runners-up. And it really looks for applications from financial organizations that are active in financial services around the world and are innovating in a different area of financial inclusion for that year's topic. It's an extremely rigorous process, multi-stages. It takes about 9 months from beginning to end. And as you can see on the right-hand side there, this is last year's process. We started with 70 applications from 37 countries. They complete a shorter round one form. This gets whittled down to a smaller group that are invited to complete a much more comprehensive form, submit audited financial statements. They get selected down to a smaller group, which goes to a selection committee, who then choose 10 semi-finalists, of them 3 finalists, and then a high jury who chooses a winner. Next slide, please. So last year's topic, there were 3 components in the title and 3 components really in the topic of what the evaluation teams were looking for. And they were encouraging. Does the savings initiative of whatever organization really start from understanding the mental models behind how clients think about savings, making it easy and positive and valuable for them? Secondly, are the savings effective? Do they match well with what clients really need and what really benefits for them? And there are many ways that this could be established and measured. And third, are they inclusive? Do they really reach underserved target segments? Next slide, please. And so that pyramid of the process that I described that started with 70 ended up at these 10 this year. And you'll see that 2 names on there that you recognize just from today. Muktinath, who ended up being the winner and were one of the 3 finalists, of course, and DSS. But these were 10 outstanding organizations, and they're all profiled in the paper that we've just launched as well. And if you want to learn more about them, I commend that to you. Next slide, please. Briefly on this paper, it launched just in time for Microfinance Week in November. It was published in English, but the Spanish and French translations are now ready and will be published in the coming days. What this paper does is give a background and a tour of the subject matter, the landscape of savings, who does it, what are different ways, why it matters to women, the process of the award, and then through 3 broad approaches to savings that are listed there, 1, 2, and 3, we do the case studies of the 10 semi-finalists as those organizations exemplify a particular approach. So designing products for people and purpose, that's really from the design side. Enabling savings through delivery innovation. How can we employ new technologies, new platforms to make saving easier, faster, more efficient, more affordable? And third, how can we encourage clients to save through financial education, through removing pain points? There are also boxes on dormancy, regulation of savings, and the responses to COVID-19 and as COVID relates to savings last year. And finally, factors for success. Next slide, please. This, what makes a savings initiative really work? And this is the hardest part of perhaps the year, and definitely of the paper writing part, because we go through literally thousands of lines of writing that we have submitted to us and thousands of pieces of data and hundreds of supported documents to try to extract from that what are the commonalities that make savings initiatives really succeed, really valuable for the clients that need to be able to save. And we'll talk about these in a bit more detail throughout this hour, but in short, it's about having product design that's matched to a particular purpose, but also matched to the person, trying to really understand what is this segment, what is this person, this client type really need, what type of saving is best for them. Are savings simple, easy to use? Is the documentation accessible, understandable, particularly for populations that may have low numeracy and literacy? Does an organization communicate with clients on how to save and when to save? Is there a financial education component of some sort? Are there innovations in how savings are delivered? Are there ways to take, and when we talk to Abed later, examples of taking old models but adapting them for a new world that can be a crucial way to reach clients? And last, understanding clients and taking that understanding of behavior into incentivizing positive savings. This last point is critical. And while it's the last on this list, it really should be first. It comes first in the process, because you have to understand what are the pressures on clients, their pain points, the mental models to help them, encourage them to save. And with that in mind, I'm going to hand over to Laura from the Behavioral Insights team now to explain how these insights, what they reveal about how people manage their finances, make decisions, and what incentivizes or impedes savings. Thanks.
Sorry. Hi. Can you hear me all right?
Yes, we can.
Great. So sorry, I realized that once I knew how to share my screen, I could no longer unmute. But thanks so much for having me. It's always a bit awkward to talk to myself and not see everyone that's here, but I'm very happy to almost meet all of you. I'll start by saying that despite really liking the flattering introduction that Sam gave to me, I'm far from being the only person who works on making really practical recommendations for microfinance practitioners around the world using insights from behavioral sciences. It is a growing school literature, and there are lots of really good people doing this out there. But a little bit to basically, so it's as if we'd planned this. I think what I'm hoping to do today for you is not really try and convince you that behavior matters and that human-centered design matters. I think, as Sam's presentation just showed, a lot of you will already care about designing for the people that you're serving, but it's giving you a little bit of a model to underpin how to do this, a model, a methodology, to try and theorize a little bit about how to go about understanding the people you serve and designing for them. It's going to go really quickly, so I'm really hoping I'm going to give you a taster for it, but please don't hesitate to get in touch later if you'd like to chat through any of it. I will gladly give you resources as needed. So a little bit about who we are first, because I guess not everyone knows the Behavioral Insights team. So BIT for short started life in the Cabinet Office in the British government in 2010. And we have now been an independent social purpose company for over 6 years. So we spun out of government in 2014, and which allowed us to spread internationally. And so we now have actually now over 200 staff and 9 offices around the world. The map you see on the right of the slide is the blue countries are where we have offices, and then black countries are where we work. I mean, where we've done some work, including obviously we work in the countries where we have offices as well. I'm currently speaking to you from Paris because I am now the head of BIT France. But what we do is we generate and apply lessons from behavioral sciences, and so that means behavioral economics, but also psychology, neurosciences, everything that has to do with understanding how humans behave. And so we generate and apply these lessons to inform policy, improve public services, and deliver positive results for people and communities. We've run over close to 800 trials now around the world in over 35 countries, done engagements in slightly over 70 countries, work across the policy spectrum. So we work far beyond financial inclusion to everything that has to do with political action and public action in the world. We also do a lot of capacity building and have trained more than 10,000 civil servants and practitioners around the world. So if that's more of an interest to you, also very happy to tell you more about the way we do capacity building around how to apply lessons from behavioral sciences. But what are behavioral insights? So it's a term that we came up with about 10 years ago and that has stuck. But the idea is that it's really a practice that sits at the intersection of 4 key groups of disciplines. And so psychology here, but mainly to say everything that has to do with understanding behavior in humans. And so that will combine also neurosciences and behavioral economics. And then economics, because we try and really always have at heart to propose practical solutions that work within the constraints of policy and economics, and so within the systems that we're working on. And we combine this with thorough knowledge and experience of methods of evaluation and research, and so both qualitative and quantitative, to make sure we can understand the problem at hand, but also evaluate whatever we put in place to try and make sure we know what works, what doesn't work, why it works, and how we can make it better. And so all this allows us to introduce this more realistic and evidence-based understanding of behavior into design. So this is a lot of abstract chat to get to what I actually wanted to talk to you about, which is, what can this do for you, and how can it help us better understand savings behaviors and the way we can better design to encourage savings. So if you, and this is these, I'm obviously going to tell you things that you know already very well, but classical economic models say that, if individuals were given the chance, because it is the financially optimal thing to do, they would save. And so a lot of the promotion of savings, a lot of the promotion of financial inclusions has started from saying, well, in order to encourage savings, what we first need to do is give them the opportunity to do so. And so the first thing will be to start with access. Access is obviously fundamental, and you will be familiar with this in many of the different programs that, for example, the finalists that Sam just told you about embody this as well, is make sure access is easy, is close to people's front doors. Very often we'll be asked, can you encourage these people to save? And we'll say, well, there's no infrastructure. So, it's never going to be the optimal thing for people to save into a bank account if the bank account is a 5-hour drive away and the bank and the ATM is broken half the time. So solve the access problem. And that has been done in many places, but yet a lot of people, still see low uptake, low usage. So then people said, well, it's not just about access, it's about capability. And so this is when all large programs of financial education started appearing, and knowing why you need to save and how to save is really important. I mean, small word of caution here, and this is something I care a lot about. You know, a lot of the financial education programs very often assume that people don't know why they should save or don't know that it's a positive behavior. I made a little furious by this very often because, you know, the truth is we are very often, and you'll all know this very well, we are most of the time addressing people who have had financial lives all their lives and who have actually had to face circumstances, running businesses the way many of us would never have had to make these types of financial constant decisions. And they actually know very well why they should save or why capital accumulation is a benefit. So it's more about, you know, justifying the use of formal financial products or certain types of savings or educating past the only need to save. But yet, you'll understand now the theme of my talk. This isn't always enough. And you know, even if you give good access, good financial capability, you'll not always see great usage of formal savings products and increased savings. And so this is where, in this kind of mini model of behavior, I really want to argue that, you know, what matters is also making sure that we understand the motivation of individuals and making sure people want to save, with a subtitle of want to save with the products that you're offering them. And unless programs, products understand individual motivations, and with that, I'm using this as a bit of a kind of overarching word that combines, you know, preferences, ways we think, what actually gets us to do something. Unless you take these into account, programs and products are very unlikely to be successful, and you know, they might get adopted but not used, or just not adopted at all, or in any case, you know, adoption will be limited. And so this is obviously much more complex than what I'm about to present to you, but then there are a series of questions and big themes you can ask yourselves when you're trying to understand why might people not want to save using these products that we're offering to them. I've tried to highlight 3 key things that I think are really important from our experience of trying to encourage savings around the world. And so the first thing, and I think this is something that is very easy to grasp because we all suffer from it, is the notion of present bias. And present bias is our tendency to attach more value to costs or gains in the present than costs or gains in the future. This is, for example, what's going to explain, and this is why you have these icons here, what's going to explain that if I say, okay, I'll go to the gym tomorrow for sure, when tomorrow comes, the cost of going to the gym is now much, much stronger to me. The perceived cost is much stronger to me than the perceived gains in the future. And so on that day, I might not go to the gym. Similarly, I might say, you know, I'm never going to eat cake ever again. And then when the cake presents itself to me, the immediate reward of eating the cake at that point overtakes for me the future cost of the calories that it'll add to me. These really kind of daily life examples, what they show to me is, and the point I'm trying to make is that applied to savings, this could explain why you would rather, when you have cash in hand, spend it today on things that bring you immediate reward, immediate pleasure, even, and, you know, rather than save it for tomorrow, even if you're then kind of letting go of the additional interests or even the additional gains from accumulating capital that could allow you to invest in bigger things. And so, and this is true of all of us and very present everywhere. How can we design to counter present bias? And this applies to all of it, you know, all of us. If you've ever downloaded an app that tries to encourage you to do more physical activity, or if you've ever tried to look at, you know, how to lose weight, this is similar tricks. On savings, there are additional design things that we can do. But so the first thing is, well, I'm going to change my own order, is immediate reward is to compensate the costs of savings are things like, for example, giving you, and this works very well, for example, with physical activity. For savings, it could be, for example, giving you a lottery prize when you sign up for a savings account, or small things like this. To give you examples, we ran projects in Mexico where we found that things that were very effective were giving people, you know, merchandised thermos bottles, because they really cared about these small token of appreciation, which compensated the fact of overgoing the money that they were saving. Other things are automatic savings. I'm going to go a bit in a list format here, which so basically means you'll preset in the future that some of your salary, some of your income will be diverted into savings. That means that you don't have to remake that decision today, which kind of is the source of this problem of present bias. Committed savings is about making it harder to spend today. And so this is why I put a piggy bank here. This is the mechanical committed savings. The most kind of simple example is if you put the money in a place where it's difficult to access, you're more likely to save it. Or things like social pressure. And so I know that Bruscas or any form, depending on where you're from, whatever those peer group savings mechanisms are called, the idea, of course, is a combination of saving and loans, being that everyone saves at a set frequency, and then in a rotating manner, people will get a loan from the group or the combined saving pot, basically. And the mechanism here is purely social pressure. And so your peer group, if you fail to bring the savings to the pot, will pressure you in through all sorts of formal or informal mechanisms. But that can work to counter present bias as well. The second thing, again, running through this a little bit, but the second thing is preferences. And so that sounds simple, but the point is, poor people at the bottom of the pyramid have financial preferences like all of us. And that are going to impact on the way they want to save and what they want to do with their money. And so it is not because we think that it is a financial optimal thing to do to not spend on weddings or festivals or things like this that people are not going to do it. And there are very good reasons to do it, either for subsistence needs, but also for questions of habits, taste. It might be that people prefer the slightly more expensive food item, and this is something that has to be respected in the way we build products. Social influence is also an extremely important good. It's extremely, social capital is an absolutely fundamental thing, especially in contexts where you have little resources because it acts as an insurance mechanism. And also things like, respecting business needs. So understanding what your clients' businesses require. And so, for example, it might be lumpy investments at specific set times, et cetera, and building for these types of preferences. And so again, you'll understand the theme. So successful financial products need to be designed with context and individual preferences in mind. And so things that you can think about here or things that people have done is, for example, removing constraints on cash transfers and not imposing anymore what people have to spend the money on. Or adapting even the financial products fully. So understanding, like, for example, and it's not all the same reading, but it's in some countries of, majority Muslim countries, it might not be accepted to receive interest on saving products. And so you'll very often see that people actually don't want to get savings, don't want to get interest on their savings. And so removing the interest or diverting it into a separate, more adapted product can actually increase uptake. Or if it's specific things, designing for specific businesses like harvest-specific loans, etc. Finally, trust. And I put it last, but mainly because I wanted it to be the last and most important thing I think about, because this is probably the biggest learning I've had from 15 years in working in this field is, adoption and usage of new savings products, especially in places where formal financial institutions are recent, have suffered very often from a bad reputation. This is the most fundamental thing to think about. How can you build trust? And think about it, savings is about, for people who've never had formal financial products, savings might mean that you have to kind of give your money away. I'm almost done, Sam, I promise. And so the way you think through trust is by making sure that people can see their money. And so things like balance checks, balance notifications have been very useful for this. So I'll stop here, but I was just trying to give you a flavor, but basically the way you do all of this, and this is the way we do it, this is the methodology we apply, but the idea is take the time to understand your client. And so this is this whole exploration phase that we're talking about before you design the solution, and then trial, test, see what works, see what doesn't work. And the reason why you see all these arrows is because this has to be iterative in order for it to work well. The same way people, when they design digital products, they'll show you similar things. To do good human-centered design takes exploration and trial and error. And I will stop here. If you want to find out more, I actually don't think you'll get those slides because they live on my computer, but we can send these out later. You can look us up, or we can, and lots of resources are on our website. Sorry, Sam, I took way too long.
It's okay. Thank you very much, Laura. Really appreciate that. Govinda, if you could turn your camera on now and join me. And Camille, next slide, please. Great, thanks. Delighted to welcome Govinda Raut, who's Chief of Small and Micro Banking at Mukti Vikas Bank, the winner of the award, as I already said. Govinda, welcome. Shall we kick off with you telling us a bit about the bank, the structure, and the rationale for how this savings model works? Can we have the next slide, Kami?
Okay, thank you, Sam. Good evening and namaste to all participants from the globe. This is myself, Govinda Raut from Mukti Vikas Bank, Nepal. Now I'm currently based in Kathmandu. I want to talk a bit about our bank. This is Mukti Vikas Bank. It is a leading national level development bank in Nepal, licensed by the Central Bank of Nepal. That is called Nepal Rashtra Bank. We were established in January 2007, just stepped in 15 years. And we established with a tiny amount of paid-up capital, that is 110,000 US dollar. Now it become 40 million US dollar capital we increased because of its popularity and its best performance. As you know that all banks are doing general banking business, except that we started microfinance program from 2009 with establishing a separate vertical. However, at that time, the central bank was directed bank and financial institution to go to the downward people, lend to the deprived people as a part of their lending portfolio. They must have to lend some portion of their lending to the deprived people, but Muktinath Vikas Bank established a separate vertical to scale it up throughout the country, and it's establishing as a major component of the bank. Can you go, please, next slide? Yeah. If we talk about our saving product, we have 6 kind of saving product. These are some are mandatory savings and some are voluntary savings. This personal saving is a voluntary saving. People can open this saving account with a normal, like just 100 rupees. It's like $1. And pension saving is a long-term saving that need the future financial goal of our customers. If a customer save for 15 years, then they can get double of the amount what they have saved for. And if they continue their saving up to 10 years or more, then they can get 50% of additional amount, whatever they save. And this is the one client save a fixed amount of money for the long period of time to meet the future financial goals, like long-term financial goals like education of client, children, or their old age safety, or like marriage, so and so forth, kind of long-term financial goals. And insurance saving is a new saving product that we introduced 4 years back, and it is developed because of to fulfill the access to life insurance gap in the rural and the low income people. The account can be opened in the tiny amount of money, and one member can deposit money, deposit insurance saving to purchase a life insurance policy, whatever the amount of they like to purchase. This is a kind of investment as well as future security for the customer. And Atmanirbhar saving, it is the saving linked with the migrant workers for their self-reliant, making them self-reliant. When a migrant worker goes abroad and he earns during his stay in abroad, but when he come back to the home country, then he is without any moneyless, but he learn some technical knowledge about what he does in abroad. So we are thinking to link this saving product with the enterprises development. when he come back, whatever he saves, we add equal amount of money as a without collateral money loan. Then he can start with the lump sum amount of his deposit as well as our collateral free loan, and he can start his enterprise. And this Sanchay saving is the regular mandatory saving. A group member, they decide to save a tiny amount of money for a long term, and when they drop out from the group, then the accumulated money can be used for their future, any kind of their enterprises. Yeah.
Govinda,
This is yeah.
Sorry to interrupt.
Okay.
So can you tell everyone what does an adapted solidarity group model mean, and why is it important for clients? Why did you choose it? And next slide, Kemi.
Yeah, this solidarity group is the group guarantee model. We form a group, like-minded people's group at the field level. Especially, we have engaged women clients. Currently, we have 140,000 these group members engage in different groups, and they form people of 10 to 20 people in a group. And we formed this group to make a viable and sustainable banking model. The solidarity group model was replicated from the Grameen Bank model that was very successful in Bangladesh, and we have modified it slightly and implemented in our context. Like Nepal is, it's a hilly country, and the terrain is very difficult, and we have modified it slightly and implemented in our context. And we developed this solidarity group in the rural and remote area as well, to reach out large number of people and to serve them in a better way. And it's the Muktinath Vikas Bank was thinking to be an inclusive financial service provider, as well as one side is there is general banking, and other side is serving to the low income people. This amalgamation of this kind of banking model in the same branch roof is of to make it happen. We developed this solidarity group model, and if you see, we can lend in solidarity group without collateral loans, and there is a group trust among the people, and as well as to reach in the remote and rural area, it's very difficult to sustain, and operation cost is very high. So we try to reduce our operational cost to reach out the rural and remote area. We formed this solidarity group model. Yeah.
Yes, you've covered some of the challenges there. And by the way, in the paper that I mentioned earlier, there's a lot more detail for those who are interested in the how that model works, and also the challenges that Muktinath particularly had to overcome. But what are some of the lessons you've really learned in recent years from this initiative?
If we talk about the lesson, what we learn, definitely if we develop a product or any kind of services, as earlier mentioned about we did discuss that the need of client is most important to identify, and address the client need is very important. How people they perceive their need, and if we develop our product suitable to their need, definitely that is the very important thing. And to reach out the very low income people and the very poor people, doorstep service is more effective than the calling them to bank office, because poor are not comfortable with the fancy office. And when our loan officer reaches to the doorstep of our client, then they are more friendly, and we choose our staff from the same community and from the same geography, that make more familiar to the reaching to the community. So this is very important thing. And if we talk about the saving habit and the saving development of the from the saving development, saving increment, saving mobilization perspective, privacy of account is very important. Earlier, like 10 years back, we used to announce the amount what people deposited in a group. But these days, we have been maintaining the privacy of our client amount, what he or she deposited in her account. That is very important thing. And the security and the safety of the deposit also very important. We have developed, after learning this thing, we developed the alphanumeric kind of withdrawal system that is more secure for withdrawals. And
Govinda, we've got some questions coming in from the audience, and we could do them all at the end, but I think while it's just you and they're specific to you, let's try and answer them quickly if we can.
Okay.
Does the solidarity group model benefit from interest rates? I mean, do clients, do they generate interest for clients? It's one question.
Yeah, if we talk about the interest rate, it is more competitive with compared to our peers. Definitely this interest rate is more competitive, and being a development bank, we are the development bank, not 100% microfinance institution. We save lower deposit, we mobilize lower interest rate deposit from the rich people, and we invest in that money into the lower segment of people. That's why we are able to reduce our interest rate while even reaching in the rural area.
Right. There's a lot more I'd like to cover, but I want to make sure we've got time for everything else and the group chat at the end. So
okay.
There are questions coming in, and I think you can see them. So maybe you could even type the answer to Kabinda, who has a question specifically for you. I'll let you address that, Govinda. Thank you so much for that. And we'll come back to you in a little bit.
Okay.
So Camille, can we have the next slide, please? We're going to hear now from Janet and Abed, and I'm going to step away, and they are going to have some questions for each other about savings at the frontier and DSS platform. Thanks.
Thanks, Sam.
Abed, can you turn your video on? You're muted.
Yeah.
Great.
Thank you very much. Okay.
Thanks very much, Sam, and thanks for inviting us to be part of this webinar. So I'm just going to briefly present the Savings at the Frontier programme and then hand over to Abed to present DSS Platform, which is one of our partner organisations. So Savings at the Frontier is a $17.6 million programme, which is funded by MasterCard Foundation and is being implemented by Oxford Policy Management in the UK. The programme runs from October 2015 to June 2022. And we're working in 3 countries in sub-Saharan Africa, so Ghana, Tanzania and Zambia. And Savings at the Frontier provides technical and financial support to 9 financial service providers, or FSPs, across the 3 countries. And these were selected through a competitive process, which we opened up to a whole range of FSPs, so not just banks, but also MNOs, MFIs and fintechs. And we're working with each FSP to develop innovative products and services to reach the real mass market of informal savings mechanisms and their users. And again, we categorise ISMs quite broadly, so that can include any kind of informal savings mechanism from sort of traditional ROSCAs and ASCAs and VSLAs, which are so prevalent in sub-Saharan Africa. But also to incorporate the SUSU mechanism, which we'll hear more about in Ghana. And our aim is to increase the financial inclusion of those ISMs, giving them access to a wider range of meaningful formal financial services with a particular emphasis on savings. And we're trying to find the triple win for basically solutions which will meet the commercial requirements of FSPs, so will be financially viable, but they also will bring real benefits to the ISMs and the members of those ISMs. And it's really important to us that we don't adversely affect the social capital. As we've heard, there's a lot of social capital in those groups, and we really want to protect and preserve that social capital and the social good. And we also support the FSPs to really think about the customer perspectives. And this might be through undertaking primary research, finding out more about potential customers, looking at customer usage data, and obviously collecting and responding to customer feedback so that that customer perspective is never lost. SATF also has quite a large MREL, so monitoring, research, evaluation and learning component, whereby we undertake research pieces and we feed that research back into the programme implementation and adapt it, and also the programme implementation feeds into our research. And we're increasingly sharing learning from the programme with a targeted audience in the hope that other FSPs in Sub-Saharan Africa and beyond will feel inspired and will want to experiment with serving this large market. And towards the end of the project, we'll be sharing the business models and the models that have been developed by our partner FSPs in the hope that people can learn from what has worked and equally important, what hasn't worked in the tests we've been running. Just to present, could I have the next slide, please? So this is just a quick outline of our partners in the 3 countries. So as you can see in Ghana, we have 3 partners, so Access Bank, which is a mainstream bank, and then DSS and Emergent, who are both fintechs. In Tanzania, we're working with 3 of the large banks, so Equity Bank, NMB and TPB, and another fintech called DMA. And in Zambia, we're working with 2 MFIs, so MFinance and Vision Fund. And I'm going to hand over to Abed to talk more about DSS, and then we'll have a bit of a Q&A between Abed and I.
Thank you very much, Laura. Janet, sorry. Laura's the first speaker. Okay. Janet, this is DSS. The illustration shows what we do. You see the Susu Enterprise. These are registered financial institutions licensed by Bank of Ghana to collect money from people. They don't give loans, they only collect deposits, and they have what we call agents, people they work with, mobile agents who collect money on their behalf. So Susu Enterprises with their mobile agents go to their customers to collect money. The customers are mainly informal people who will not go to the bank. So they go to either their houses or their markets where they sell or wherever they can find them, collect money in small bits, and then they bring it to the enterprise. And we give them the system, an Android app on the phone, and they use to record the transactions. As soon as a transaction is recorded, the customer receives a message, and then the enterprise too gets it at the back end. And all these generates reports that are given to the regulator on a monthly basis. And the Susu Enterprises make their money by charging commissions when customers withdraw. We make our money by charging them subscriptions for using our system. So in a nutshell, that's what DSS does.
Thank you. So Abed, can you tell us more about your background and why you set up a DSS platform?
Yes, I was when I was in school, I was helping my mother, who is a Susu collector. I got interested in the work, and after school, I took over. So then she had 300 customers. We had that, and we grew the customer base to 1,700. But in the process, we had to get agents. These are people who do collection on our behalf. Now, these agents will go collect the money because the recording was manually done on the field, and we were then entering it in Excel stuff. When they come back, they were always underwriting what the customers gave them to us. So a customer gives you 50 CDs, they record the 50 CDs in the passbook for the customer, all right? But then they record 40 CDs for us in the office. Then they pocket the 10 CDs. And when this went on for a long time, we realized suppression of the cash was affecting our liquidity because we had to pay the customers what were in their passbooks, not what the agents recorded for us. And these agents will run away when they realize that you have found out. And because the data too wasn't accurate, as a manager, I wasn't making very good decisions managing the funds. And so I also added up to the liquidity issue, and we realized we had to digitize our system on the field, not just in the office, on the field. And that's what led to building a system, and we had then built a basic version of it when we met with Satya. So that pushed that into system building, and we formed a company around it.
Thank you.
Okay.
So you mentioned when you met with Satya. So how has working in partnership with us helped DSS platform to develop? And what were you planning to achieve when the partnership first started?
Yeah, by the time we met you, we had a basic version, but we knew it was very basic. It couldn't do a lot of stuff. We can't scale it up. So one of the first things was to scale it up and make it available to a lot of social enterprises, because our problem was a problem for others. And if we can solve it, then we can help them solve it. So scale it up and try to get as many customers as possible. We were targeting somewhere 40,000, or at least on our way to 40,000. Now we have more than 35,000. So we are on our way to 40,000. So something like that, yes. So that was a two-way promise card we had. And what was key in that is we were interested in the customers. The customers were the source of income for the enterprises, and then the enterprises are the source of income for us. So we think if we focus on growing the customers for the enterprises, then our source of income is secured. So we're very concentrated on that. But to get to the customers, we had to go through the enterprises. So we quickly wanted to digitize the enterprises and then get to their customers. And that was something Satya wanted to do. So that was our focus: go to the enterprises go to the customers through the enterprises, and scale up the digitization. Yeah.
Abed and Janet, we've got some interesting questions coming in specific on this. So if it's okay, I'd like to jump around a bit and take some of these.
Okay.
So this is for Abed from class. Read DSS, how have you taken care of the privacy of SUSU members? I assume that means of the end beneficiaries rather than the enterprises. I see you send data to the regulator. So can you talk a bit about privacy?
Data to the regulator is basically how many number of collections were done in a month, how much was done in a month, how many were male, how many were female, what were the expenses. It has nothing to do with customer information. It has more to do with the operations. And this gives the regulator an insight into what is happening within the industry.
Great.
Yeah. So we don't disclose customer information to the regulator.
A question from Rod, who's the new executive director of FIF UK. Hi, Rod. He says, does DSS work on both feature and smartphones? Do the clients mostly have the required tech? And are there fees associated with the services? For example, text messaging fees?
In fact, we use very high-end phones. The application is on the agent's phone, not the client's phone. And that's the agents use that application to serve the client. The client receives a message, and the message can be on feature phone or any other phone. However, we are working very hard to deploy a USSD code, which is almost ready for clients to be able to make basic transactions, check their balances, and that is almost ready.
Great. I think what I'd like to do now, if that's okay, is ask Laura and Govinda to come back on. And we've got a couple more questions. What we're going to do is, for those of you who attendees and panelists who are able to stay a little bit longer, we're going to run till 1:15 because we've got a bunch of good questions to ask. Obviously, if you're not available to stay, then thank you for coming anyway. But we'll run a little bit over. Here's a question from William Durbin. He's a board director at FIF UK, and this is for Govinda. Are the savings group model commercially viable for the bank? So in other words, I suppose, is the mainstream commercial wing subsidizing the microfinance wing?
Yeah, definitely. We cannot run our banking business in the loss. So it is viable, and we have developed in a viable way. And in addition to mobilizing saving, we lend small loans to the needy people. That's why lending as well as the mobilizing the saving, it is more than bit higher than the break-even point. Okay.
Here's a question, two questions for, I suppose, Abed and Janet on DSS. Great to see, this is from David, great to see Susu being updated in Ghana and adapted for the present time with trust and transparency. Given technology and agency, do you find your customer base is changing over the original customer base of the original Susus operating in Ghana? Good question.
Yeah.
You're muted, Abid.
Yes, it's changing. What we didn't see a lot was a young people in social collection, but now we are using smart cards, we're using the phone. Very soon we'll give them the opportunity to move money among themselves without charging them percentage on what they move. And so we are getting more young people come on to do Susu, and they are taking it as loading my wallet to spend when I want to spend, and that is getting interesting. Meanwhile, the elder ones are having to grab, they have to learn to read their text messages, follow and print out. So it's the same thing for them, but they have to learn a little bit. The young ones are plugging in because they find it equally convenient.
Great, thank you. Another question for you, Abed, you're popular today, from Anton. Can you clarify what's the role of the agent in the DSS? Why not just facilitate digital daily savings rather than having to pay the agent for collection? So I guess that means why work via the Susu enterprise and not at a sort of retail direct to client level?
No, I'm not. We're not going to do that. Susu collection is trust-based. If we are big as DSS and want people to trust us, they may not know us. It's going to take time. Now, Susu enterprises are with the people in different parts of the country. So we contact them, we try to work with them, and then we quickly get plugged into their customers. So we are able to benefit from the trust they have built. And it's better because they know their business is already something they are doing. We just bring digitization and operations, streamline it and make it more profitable.
Great, thank you. We'll take one more on DSS and then give the others a chance to weigh in. There's a few here. What about I think this is for everyone. What about non-digital saving solutions, i.e. for countries where connectivity is low, unstable, and there is less common knowledge on savings trust? I think, Janet, that's a good one for you. Does this require a baseline level of connectivity that may work in a low to middle income country like Ghana, but not in poorer countries?
It's a good question. I mean, I guess it's so on Savings at the Frontier, we're quite focused on the 3 countries where our partners have developed solutions. So there is a level of connectivity, and our partners have developed solutions in line with the connectivity that they have available. So like Abed was saying, some are using USSD codes rather than smartphone apps and are adapting in that way. I'm not sure, to be honest. So most of our solutions are tech based, and it would be difficult without better connectivity, but I don't know if others might be able to talk better about kind of the wider context and tech solutions where there's lower connectivity.
I'm happy to take this one.
Thanks.
So it's true that we find, we did a lot of work in Bangladesh, for example, in remote areas of Bangladesh where there's either connectivity issues or infrastructure issues. So, it's one thing to have mobile money, but you need places to use it and places to spend it. And so, but a lot of the things we're talking about, they were actually mechanisms that existed digital solutions have just made them bigger, better, faster, and more efficient. And so I've increased the size of the market because it's just become profitable given the volumes and the scales it could reach. But a lot of the same mechanisms can be replicated. The savings groups existed better on informal, the whole mechanisms of the savings group is actually informal. And things like, even in places where there's no banking infrastructure, there are a lot of associations and organizations who replicate these types of kind of how to commit savings to a box that are perfectly functional to promote, just accumulation savings and consumption smoothing. And it's really, I actually think it's a really good question, and it's the fundamental first question to ask yourself in the process of design is what can be done within the context.
Your reference to savings groups is apposite, really, because we have one of the sector's luminaries here writing questions or statements, so I'll put them to you. This is from Jeffrey Ash, who needs no introduction to anyone here. I think he said there's no reference in these presentations to savings groups. Currently 15 million of these groups that operate far from banks, they self-replicate and survive on their own. But he makes a longer statement. I'll try to read it fast, and then maybe any of you who want to try to address it. Given that hundreds of millions save in saving circles, why don't we encourage those with the best run groups to share their practices? There are millions of Rosca organizers, and with a small nudge, they could train more groups, be more cost effective, sustainable, and understandable to the poorest. Why has that model not been leveraged and that expertise taken, or has it? Anyone want to have a go at that?
Okay, let me.
Yeah, Abid?
Yeah, it's something we're to get to in if we had finished our presentation, but let me touch on it quickly. In the course of our work, we had to build social enterprises, the managers, we had to build their capacity. And today they are helping us get into the villages with DSLs. Now, within the groups, all those are people who are working. If you want them to be training other groups, then it must be their work. A social collector's work is to work with, is to collect deposit mobilization. So then they happen to be in a better position to move from just social collection in the peri-urban areas to also social collection in the villages where groups are. And we are seeing this. Just last week, we used 3 weeks to digitize 45 branches of an institution, because 15 SUSU managers were available to DSS to go and do that work. The advantage is that we have people who are experienced in collection, savings, that is their work. And when you deploy them into the village, they get results.
Anyone else want to add anything to what Abid said on that?
I think,
let me, okay.
Go ahead, Govinda.
Let me talk a bit about the Rosca model that Jeff, he mentioned about the Rosca and his model. Like in Nepal also, there was a village banking model initiated by few of organizations, but later on, Grameen model of the group methodology was more dominated by the village banking model. That's why it is not become as successful, but it is very much impactful in case of Nepal too. So I think in some cases we have to study more and scale it up even in Nepal, I think.
I have a couple of questions I'd like to ask to you, and I'll, assuming that I guess you guys can stay a little bit longer, and most of the audience are still with us as well. We still have 100 people, so that's great. What I'd like to ask any of you, but perhaps starting with Laura, what lessons can we take from how savings is provided, is mobilized in low-income countries, and take those lessons to high-income countries to encourage product design and better usage? Are there lessons that can come this way?
Yeah, sorry, I was looking for my unmute button. So first, I'm sorry, I need to run in 5 minutes. So I think this is the last one I'll take. But thank you again. There are lots of things, and so I think this is where at BIT we sit in a pretty kind of very lucky position where we get to do work both in developed and developing countries simultaneously, and in particular the work that we are doing in developing countries is specifically for everything we've just discussed, because it forces us to strip it to the core of preferences and not kind of letting ourselves be blinded by technology, new evolutions, new apps and whatnot. We have to get back to the core of what people want, what people need, and what we can design for. And I think it's really helped us think in a similar way when we work with people like HSBC, Monzo, like when we try and think about how do we support people who are also vulnerable here, you know, in the UK, in the US. actually how do we kind of like get back to their preferences, their needs, rather than just try and throw more technology at it. And I think this is like the key lesson for us is let's see technology as a tool, not as a solution in itself. You know, digitizing everything is not always the right call. And so it's more of a methodology lesson. I think I gave you a different answer last time you asked me, but you know, I change my mind sometimes.
Janet, do you have you live in an advanced financial economy? What do you think can be taken this way from your umbrella view with savings at the frontier?
Yeah, I think really trying to reach out to the customer and understand the customer needs and base products on that, and also so it's designing products, you know, based on all of the things that Laura was talking about, but also then adapting, you know, once then looking at the customer data, and this is what we're trying to do a lot of on SATF, is actually look at the products, look at the uptake. You know, are people using the products? If they're not using them, why not? And then going out and, you know, really meeting and engaging with customers. And I think that's something that ABID, DSS particularly, has done well. And we have a lot to learn from that approach.
Great. One more question from me, and I think I'll ask this to Abid and Govinda. Are there savings products or services that you think are under promoted or that aren't yet at sufficient scale, but you'd like to see really scaled and replicated? Abid, do you want to have a go at that? You're muted.
Service products, you're looking at maybe something around pension. I saw Govinda did something around long term. But the challenge we're having here is if people can't survive on the short term, they can't look long term. So that is something we'll have to work on. Long-term savings, not just for immediate consumption. And if we had a lot of people do that, they would have braced themselves for the COVID shocks. That would have been wonderful.
Govinda, Mukhtar has more types of different savings products for its clients than most others. It's a very wide range. But is there anything that you would, in the medium-term future, like to try to roll out?
Yeah, we have many saving products, but the few of saving product still we need to work more to scale it up and reach to more and more people. Like as I already mentioned, that self-reliant saving that is linked with the migrant worker, that is we need to scale it up and reach out to more and more people. And it's very we need to reach the find the migrant worker people, and that they are convinced of their family member and the migrant people. And we are trying to link it with the internet banking also. So it's a bit complicated, but we are trying our best to scale it up. And in addition to that, we already tie up with the life insurance product, but still cashless health insurance products kind of saving is also needed in Nepalese context. So we are thinking and talking with the insurance companies as well. How can we collaborate with the insurance companies so that we can link low-income people with the cashless health insurance saving product?
We're at 10 minutes past. There are more questions I'd like to have answered and or even asked myself. What I would say is, for those of you, I'm sure that my fellow speakers will be very happy to take some questions if you reach out to them individually. There's a question from the Bank of Zambia for you, Govinda, but perhaps I can connect Govinda with you to talk about that. And Jeffrey Ash is saying that he has research PowerPoints on this non-institutional savings approach, and so he'd like to connect with you to talk about that. So we're at the end now because we've kept everyone for a while. I'd like to, on behalf of both sets of colleagues, my e-MFP and FIF colleagues, to thank my panelists for joining today. We hope that this has given everyone something to think about. If there is an appetite for this, we'd be very willing to make this into a series, because this is high level and general today, But if there is appetite for a series of sessions that can go into some of the particular subjects we've talked about here to go deeper, we'd be very happy to do so. There's one last thing I'd like to say, and this is wearing just my FIF UK board director's hat. FIF is run by an all volunteer board of passionate professionals, and we can only do events like this with support of a handful of corporate sponsors that you saw on the first page. If any of you are interested in supporting financial inclusion and connections in the UK and would like to hear about corporate sponsorship, please see the email address on the screen there and contact Rod or Kelly. FIF is a very small organization that tries to do a lot of good, and we'd welcome any help. But with that, thank you everyone for coming. We appreciate your time, and especially to Janet, Laura, Abed, and Govinda. So thank you very much, everyone, and stay well. Bye-bye.
Yeah, thank you.
Bye.
Bye.
Namaste. Bye.
Bye.